Well, we were just chatting with Nirmal Jain on a couple of things really to talk about. First, that, there has been that stake sale. The deal has been valued at IIFL Wealth at about 14,600 crore rupees. Investors include the likes of Amansa, GA, HDFC Standard, and IIFL now owns about 51.11% in the wealth arm. They're raising funds from institutional investors. So let's hear out what Nirmal Jain, founder and chairman at IIFL, had to say about it.
Thank you. So as you said, these are marquee investors. The three large investors are Amansa Capital, we have Ward Ferry and also Al Rasid family. Besides that, HDFC Standard Life Insurance and so these are the five investors. These funds will be used for growth, particularly of AMC business and NBFC, which is a wealth NBFC or subsidiary of wealth. So both these businesses have been growing very rapidly and they need more capital to bolster the base to grow faster. So I think our wealth management AUM has been growing at around 20-25% for last few years, and we expect that growth rate to continue. So it's around 1,30,000-1,40,000 crores now, and as Indian economy grows, we see wealth effect coming into play. There are many businessmen, basically they divest partly or fully their businesses. They are getting money in their hands. Besides this, there's a lot of old money which has not been under management of a professional or a well-established company. So we are seeing even that money coming and coming under advice. So I think this business would continue to grow at a good pace, at least in the foreseeable future, and as things stand today. But it's very difficult to do crystal ball gauging and put a number that what the AUM will be 1 year or 2 years later. But as long as Indian economy keeps growing, I think a lot more wealth will be created, and I think we should have more wealth to manage. So in the group we have two NBFCs. So one is a retail NBFC, which will get listed separately once this reorganization exercise is over. And this NBFC that we are talking about is a step down subsidiary of wealth, and this focuses on financing or meeting the finance requirements of our HNI customers. So if you see, our book is around 8,000-9,000 crores, which is just about 5 to 6% of total assets that we manage. And most of these loans that HNI investors take are for very short term and very opportunistic. But I think as the base grows, we can see this book also growing, and to grow the book from here, I think we'll need more capital for this. So as I said, that in our group you can look at our group as three distinct business lines. So we have one wealth, and that wealth has a subsidiary NBFC which primarily meets requirement of wealth customers. Then we have another NBFC which has a subsidiary housing finance company and another subsidiary which is a microfinance company. So this primarily focuses on retail borrowers and retail lending, and this is the company where CDC invested and they took a 15% equity stake in this company. And the third business line is our IIFL Securities business, which is retail broking, institutional equities and investment banking. So if you're talking about IIFL Finance, which is distinct from IIFL Wealth, where CDC has invested, I think that business is growing well, and the reorganization scheme has been sent to SEBI for approval, and SEBI waits for comments from NSE and BSE. So they had few queries that we responded to. I think the process requires all the regulatory approvals, and then we go to NCLT, and then I think shareholders, creditors approval, and then final approval from the regulators. So it may take about another 6 to 7 months from now, or a little longer also, depending on how long approvals take to come by. So as far as IIFL NBFC is concerned, our primary focus is a small ticket loan, and so if you look at our home loans, incrementally they are about 20 lakh rupees, or SME loan they are about 4 to 5 lakh rupees. So these are the loans where we reach out in small towns, which is tier 2, tier 3 or even tier 4, and these borrowers, so these customers are many a times first time to credit. So they are the small or very small businesses that have not been they do not have access to formal credit. And I think there's a huge market for that. And we really don't compete with banks head on in terms of credit, because most of the banks haven't reached out to these areas. And even if there are, then there are very few of them. And therefore, I think we see a market growing very rapidly as the economy grows, because these micro, small and medium enterprises, and which is also where government thrust for growth and lending has been. I think there's a big opportunity there, and our unique advantage is that we got 1,200 branches across more than 1,000 towns and cities all over the country. So that allows us to reach out to small businesses as well as consumers and deliver them credit there. So IIFL Holding will cease to exist if this reorganization goes through, and the shareholders of IIFL Holding will get shares of IIFL Securities, IIFL Finance and IIFL Wealth. So I think all these three businesses should grow very well. All these three businesses are the core pillars of financial services, and as the economic growth accelerates, we see that financial services grows even faster, and we have critical mass, and we are one of the leading players in all the core businesses, and therefore I see that all of them should grow well.
Okay, that was of course Mr. Nirmal Jain outlining the plans at the arm of IIFL, raises about 750 crores.